Righto, welcome back everybody, and no, we weren't waiting for Councillor Morris. I'd just like to welcome everybody back to a workshop on the subject of the Bay of Plenty Housing Equity Fund. We'll have a presentation presented shortly, but I'd just like to go over a few of our health and safety things before we start off. If the alarm sounds, please make your way to the nearest emergency exit. The assembly point is Devonport Road, for those that weren't here at the beginning of the previous meeting. Please be aware that this meeting has been live streamed and the video will be publicly available on YouTube. Members, could you please remember to speak clearly into your microphones, which I'm not doing very well, and only one speaker at a time for clarity. And I presume your mobile phones are still turned off. Righto, I'll throw it open to our presenters. And do you want to take questions as we go, or would you like to get to the end of it, or how would you like to handle it?
It's probably up to yourself, Chair, in terms of if you want us to just leave the questions to the end, or we're very happy if you have questions as we go through a few of these slides. So it's really up to yourself.
We'll try that to start with, and if it gets a bit cumbersome, we'll revert. But if you'd like to kick us off, and we'll...
And how long have we kind of got? I'm just like conscious of your kind of time requirements as well.
Probably got a couple of hours if we need it.
Hopefully not. So, look, welcome everyone. I feel like we've done a little bit of this presentation already, but just really want to acknowledge that it is a very busy time. I live in the Tauranga city as well, so I know there's a huge amount of challenges that the councillors are working through, so really appreciate the time that you've given us today to give a really good update on the Bay of Plenty Housing Equity Fund. I also want to kind of acknowledge that the decision by TCC to invest into this fund was made by the commissioners. So I want to take a bit of time to go through a bit of a background about why the fund was set up, how it was established, and what that kind of looks like. And acknowledging that Fiona and Sheree has put a really good background paper that most of the councillors have kind of seen as well. And then Roy's going to have the exciting fund bit. Everyone likes to see the tangible actions of the fund, what we're doing, where we're building, the spades in the ground. So he's going to work through that in terms of the current deals, the future pipeline kind of deals, and also where we want to take the fund looking forward. And then also make sure we've got plenty of time for a bit of a discussion at the end. And we've got a few kind of questions, prompts for kind of questions that we can facilitate this workshop with as well. So does that sound like a good plan? Thank you. So I was just kind of thinking on the drive in this morning, when the traffic actually wasn't too bad, so I was pretty happy about that. But I was thinking about the drive in, the background of this fund. And we're very fortunate in the Bay of Plenty to have effectively five really big foundation endowments. And so between ourselves, Rotorua Trust and Rotorua, Trust Horizon, TECT, Acorn, which is not a party to this fund at this stage, but we've got five really large foundations. And every year, on a constant kind of ongoing basis, like councils, we're always trying to understand what our community priorities are. So we've been surveying our communities for the last 10 years, as these other foundations have, and it's always been number one or two in terms of those community priorities, the lack of safe, secure and affordable accommodation or housing in this kind of region. It's very different across the region in terms of, where I live at the Mount Maunganui, some of the most expensive real estate in New Zealand, compared to, say, in Murupara in our region as well, which is, it's got the housing, but the quality of that housing, the ability to get up to 20 degrees, it's almost non-existent. So it doesn't matter where people live in this region, where they live in Tauranga City, housing is one of the biggest kind of priorities. And, I was talking to one of the councillors in the break, in terms of if you think about the cost of living crisis we're currently going through, if you've got safe, secure and affordable housing, you can actually weather those kind of cost of living and the inflation increases a lot more. So these foundations came together and we said we can't actually make a difference in the space through our granting. So Bay Trust, that I'm the Chief Executive of, we grant $8-9 million a year. That would provide, if we put all that to housing, we could build 8 or 9 houses in Tauranga region. That's not going to make a difference at all. So we all kind of realised this is a community priority, but granting isn't going to make any difference. But between those four trusts, we've got over $1.5 billion of capital. Most of that invested, offshore, a little bit invested in New Zealand. So actually, how do we actually bring some of that investment back into New Zealand? And if you look at the offshore experiences, most pension plans, endowments, foundations have a reasonable exposure to residential property. It's a really attractive asset in its own right, has really good investment characteristics. That's why a lot of people in this room, that's their biggest single investment, is residential kind of property. Yet in the New Zealand marketplace, very unusual. Most of the rental properties are owned by mum and dad investors. So we came to the conclusion, we said, in alignment with our communities. How do we actually invest some of our balance sheet to have a positive impact, provide those houses our community needs, plus make an acceptable commercial risk-adjusted return? So this is about 4 years ago, we worked through a co-design exercise. We had those foundations in the room. We also had a number of councils in the room. We had iwi in the room. We had a lot of community housing providers, other stakeholders, and also institutional investors, so representatives from Craig's, Quaysides, in terms of co-designing what a fund would actually look like that could achieve those kind of aims and ambitions, to which is A, having a positive impact, B, acceptable commercial return, and 3, attractive to further institutional investment in the future. So as part of that process, we went to the market, had 7 responses, because we said we're not housing experts. Actually, housing, if you're going to do it really right and get that impact and return, you want to actually have the experts that know how to do this, how to attract, get the development margin, etc. So we had 7 responses to that RFP process. We went through that kind of process and ended up selecting New Ground Capital as our fund manager. And Roy will can talk about some of their background, but a really strong background, particularly in the Auckland kind of market, around doing those residential developments and getting a really positive impact and strong returns. So as part of that so we went through kind of that process and then came to the other side of that process and went out there and asked kind of commitments from people that were willing to commit to this fund. So very fortunate, again, as I said, in this region to have some strong foundations. So ourselves and TECT have committed $10 million each to this fund. Rotorua Trust and Trust Horizon have committed $5 million each to this fund, and New Zealand Green Investment Finance have committed $10 million, and then Tauranga City Council has committed $20 million to this fund as well. We've also had a lot of interest from, in discussions of iwi. They weren't necessarily wanting to commit capital to this fund, because quite often they're capital poor, but they said we were natural long-term partners for this fund to invest alongside and into. Quite often they'll have the land, we have the financing, creates natural long-term partners as well in terms of this fund. So all of a sudden we've got $60 million to deploy. That sounds a decent amount, but actually we can actually couple that with debt. So we're going to leverage this fund. We'll have a debt in this fund, $40 or $50 million. So all of a sudden you've got $100 million to capital to deploy in this region. That starts making a difference. And it's not just that $100 million initial deployment, because that capital is going to get recycled as well. So these developments, some will get sold, some will be short period, some will be long period, but that capital will constantly get recycled. And then the biggest opportunity of this fund is how can we use, once we've shown we've strong commercial returns, strong track record of impact, to attract further institutional investment in the future. And for me, if this fund is at $100 million in 5 years' time, it hasn't succeeded. It needs to be 4 or 5 times that amount to really make a material difference when we know the scale of the problem in the Bay of Plenty region. So that's kind of a little bit of a background to that kind of fund. So if there's any questions there.
Sorry, I'm just going to recirculate one that Councillor Baker asked earlier. Other councils in the Bay not really involved in this? Did they ask? Did they look?
Not as investors at this stage. We are working with Kawerau District Council and Rotorua Lakes Trust in different ways, more in terms of deals with them on land at pretty reasonable prices so that we can get housing going. But none of the other councils have come in as an investor at this stage.
Well, I think that we went out to them, but I think that TCC was in a unique position because they'd sold the elderly pensioner units. I think Rotorua Trust has been thinking, not Rotorua Trust, Rotorua Lakes Council has been thinking and trying to sell their pensioner units for the last 10 years pretty much. I think if they'd actually managed to sell them and found a good solution, a deal, and they'd committed publicly to their community they were going to reinvest that back into housing solutions, we would have definitely had a discussion with them. But we also have a number of other councils around New Zealand that are very interested in this as well. So we've been having discussions with...
Whanganui District Council, New Plymouth District Council, as examples, are looking very closely at the model to see if they might replicate it, either with us or by themselves.
If we can just go to the next slide. The next slide. Yeah, so we are getting a lot of interest from around New Zealand, from other foundation endowments, particularly down in the South Island, but also around the Taranaki side of things, going, as I said earlier on, all regions in New Zealand have this kind of challenge. All councils have this challenge. Actually, how do we invest in this way? How do foundation endowments? And one of the unique things we've done here is like develop a kind of model that says actually you can invest into this fund. You can see your capital deployed in your own specific sub-region, but then that investment, the risk and return, is spread over all the investments in the fund. So that's one of the unique elements we work through that I think all those other, the other councils and the other foundations endowments are really looking into it. Jen, I think you had a question earlier on, which was around the fund objectives, and there's definitely, there's kind of two primary objectives. One is to have a positive impact, make a, meaningful difference in the housing space. And this is where, we're kind of looking for those gaps in the market. So are we going to be building 3 to 4 bedroom houses on 400 square metres land in Papama? No, because that's what the market is actually developing, plenty of those kind of houses, right? So for us, it's each of those sub-regions looking at the gaps between what the government's doing and what's the market are doing. And we don't want to, be delivering things that the government's going to do. We don't also want to be beholden with what the government's going to be doing, because that government always kind of changes. So it's looking at those gaps. So in the TCC boundaries, predominantly it's going to be looking at those 1 to 2 bedroom kind of units. We know there's a massive shortage. I know we did some analysis, 5 years ago that said we're 2,000 units kind of short, and it's growing at 100, 200 a year. So those predominantly are targeting, elderly, pensioner, first home buyers, essential workers. The market's starting to deliver a bit of that, but nowhere near as much as we kind of need. So it's looking at finding those gaps. And then as part of that, we do an impact assessment where we look at, in terms of, is this a need in the community? But we also look at the urban design, the livability of, those developments, how it fits in with the surrounding infrastructure, and work through all that. And that gets reported on in terms of an annual kind of impact report each year in terms of those impact outcomes of the fund. So it's very much a fund that's looking for impact first, but also, in the last bit of the slide, is one of the key impacts is how do we grow the fund? So if we just go to the next slide. So if we just tried to grow this fund at a concessionary rate of return, so accepting below market returns, we'd find that we'd have those 4 to 6 original founding shareholder investors would be the only investors in the fund. If we want to be able to attract commercial, KiwiSaver, etc. investments in the future, we have to target acceptable commercial risk-adjusted returns. And so our target for this fund is CPI plus 400 basis points, which we did a bunch of work comparing to commercial property, looking offshore and going, what is an acceptable return for this asset class, acknowledging it's actually quite a defensive asset class. Quite often you'll have security over the property, so it's not like global equities where you're targeting 10% returns. So it's CPI plus 400 basis points. And that, we believe, is the right kind of level to be able to attract commercial, infrastructure, institutional returns in the future. And for me, I have a kind of view, and I was sharing this with one of the councillors earlier on. If you think about the big pools of capital in this region, right, it's not in the council's balance sheets, it's not in our balance sheets. If we look at this Bay of Plenty region, around 7% of population in New Zealand, KiwiSaver's got over $110 billion sitting in KiwiSaver. So you're talking about $7 or $8 billion of KiwiSaver investment funds that are invested in this region, but hardly any of those funds are actually invested in the Bay of Plenty, right? A very small position, probably less than 1% through maybe Port of Tauranga. Everything else is generally invested globally. So how can we create a fund and a structure that we can seed it with these philanthropic, like-minded investments, get these acceptable commercial returns that can attract KiwiSavers, etc. in the future? And I have a view, it'd be great in 5 years' time if your KiwiSaver, most people in this room will have KiwiSavers. If your provider came to you and said, would you want to allocate 1 to 5% of your KiwiSaver to a fund that's having a positive impact, that's building the houses your family needs, your grandparents need, your kids needs, and got a strong track record of commercial returns? Actually, a lot of people in New Zealand would say yes, because they can understand housing, they understand it's an attractive asset in its own right. So that's our target return. A lot of councils will kind of find that they're very challenged in terms of how they get a return out of their housing kind of portfolios. So this return is made up a blended sort of financial return from a whole bunch of different things. Some will just be, housing units that we buy to hold long term, so it's the capital gain, the rental dividend streams we get from that. Some of it will be accessing the development margin from those developments. Some of it will be development kind of finance as well. So it's a blended return of a combination of different things, and that's why we need a lot of expertise in the fund to drive that CPI plus 400 basis points, which is what we need to be able to attract further investment in the future. So just going to kind of see if there's any kind of questions after those two slides.
understand the financial. Can we go back one slide? What are the measurables of the first 4, please? Because this is our baseline that we're, when we say improve or boost or provide, what are we providing from? What's our baseline and how do we measure? What are we measuring?
This is a very tricky question.
That's why I asked you, because you're the experts.
I mean, it's particularly tricky, of course, because everything is relative. So affordability being the most obvious, difficult thing to measure. What's affordable to one person isn't necessarily affordable to another. So, which is kind of weasel words of saying that we don't have specific data points. At this stage anyway, we're measuring each individual transaction based on its relative merits, and it's a largely qualitative process. We talked before about the way that we go out to local founding shareholders, including obviously TCC for any Tauranga-based transactions, to make sure that the impact that's likely to be delivered from any one project is meeting these criteria. As time goes by and you have more deals and you have more outcomes already delivered, then it becomes easier and easier to put in place actual firm metrics. But at this stage, it's all done deal by deal. It's quite complex, to be honest. There's a lot of people involved in assessing every individual transaction against these criteria. The other complicating factor is that this is a perpetual fund. So over time, of course, we're recycling the capital. So the number of people, the number of households that we can assist through the fund just continues to grow, really.
And I'm understanding those, your intentions, and that's a bit further out, but significantly increased housing availability. That must be measurable. Like you've got a number.
So we do have,
what does significantly mean? Is that a percentage?
Yeah, so we do have targets, well, not targets, but in terms of we measure actually how many houses we're building, how many houses that we've catalysed. So, for example, it could be a subdivision that if we weren't the initial kind of investors, that subdivision wouldn't actually kind of help. So, but if we invest in the first 10 sections, it creates that ability for the developer to sell the other 30 kind of sections as well. So we do have metrics around the number of houses, the number of people in those houses, how many we're going to house.
Those metrics will come back to us quarterly?
Yes, yeah.
Okay. And so just in terms of it's hard, it's hard to say that they're the objectives that we will need to measure the 20 million fund on if we haven't got measurables. So can I just, even if your measurables aren't perfect, we do need to have something that we can say on a quarterly basis or annual basis, yes, we're comfortable that continues to be where we want to put our money, because otherwise we'll struggle and I'll ask you the question every quarter and you'll get bored, so you may as well have a look at
look,
them.
I completely agree, and it's going to be a combination of qualitative and quantitative, right?
That's
so
fine.
where we can, do here, and I get exactly the same thing from my board, and they're very keen on the number of housing units and where they are and what it looks like and all that sort of thing. So, it's a combination of that. Obviously the fund launched just over a year ago. We've only had the first few deals really committed over the last sort of 3 or 4 months. So as that gets kind of richer, it'll be definitely a combination of those things. So you should be able to look at it and go, yep, our $20 million in the Tauranga City that we've kind of contributed to, that's been expanded by another $10 million on capital coming from the other founding shareholders, coming from debt. Here's how many units we've kind of catalysed. Here's the subject, qualitative kind of stories behind those kind of units as well in terms of what we're doing. Here's how it's made a difference.
Because I think we do have some baseline, is that we sold a whole lot of properties that provided some housing, right? So this is meant to be making it better. This is meant to be a better outcome than having kept the properties not from your point of view, from a decision making at this level previously.
And that's probably something we can work with Fiona and the team in terms of if there's something specific for TCC, because obviously, every investor's come from a different perspective, but we're very happy to work with Fiona and Cherie and sort of develop some key sort of KPIs that we can kind of add onto our quarterly reports, so you can kind of monitor those as well.
Yeah, I just had a quick question. Are you aware of the Bridge Housing Trust over in the Waikato? Same as like the Queenstown.
The Perry Group?
Yeah.
The Perry Group Trust? Yes. So I had some discussions with them in October last year in terms of the CEO of that kind of trust. So they're very interested in what they're doing. At the moment, they're doing the kind of the Queenstown model, but it's not sustainable because effectively they're subsidising those people into their houses at getting no return. So they don't return any, they don't get any investment return. They just get their money back, and so they know there's only a little limited pool of capital that can afford to get no financial return on that capital at all. So they've done the Queenstown like kind of model and they've replicated that there, but they're also wanting to enter discussions with ourselves, and we said we'd get back to them probably over the next couple of months. Once we actually have the deals we can publicly communicate, then it's a lot easier for us to describe what this fund's doing. But they're quite interested in the concept because they realise, like ourselves, you can't just invest into housing and expect to get no return because there's only very few limited people doing that. So yeah, had some really good discussions with them, and we've had a number of discussions with parties like that and said, look, just give us another couple of months. Now we've got the first few deals on the ground, then we can explain to you exactly how we're getting the impact and how we're getting that financial return. Whereas before we could communicate those, it's very difficult to explain how we're going to get that return and the impact at the same time. So yeah, quite across what they're doing.
Yeah, no, I think it's a good model, and I think you could quite easily change it so you could get the returns out of it. You know, for example, you make your development return on selling the house. You know, maybe the lease cost goes up a little bit, and then obviously, you know, because they only pay the price back plus CPI. So if there's capital gain in that time, you do actually get that return. So yeah, I just think it's another example of actually, I like it because it's a hand up. And it's getting people onto the property ladder, you know, which I think is you know, you're actually helping people that want to help themselves, which is really, really positive.
Yeah, and I think, you know, we're starting to see some green shoots, positive improvement in the housing place. So I think, you know, we're seeing the government making some changes which are actually looking okay. We're also seeing, you know, some of those KiwiSavers starting to invest into the space. So, you know, Simplicity generate Pathfinder, but Simplicity, you know, they're committing significantly to build to rent, predominantly kind of in the Auckland, Christchurch kind of regions, not much happening down here, but they're going, actually, why would you not want to invest in this kind of asset class? So we're starting to see a bit of the changing ecosystem, and what they're doing down in Queenstown Lakes and what they're doing here, you know, down in the Waikato, yeah, it's something that, you know, helps add to that kind of ecosystem as well. Slightly different than what we're doing, but we're definitely in discussions with them. And I think that's why we've had some really good discussion with the 3 trusts down in the Central Lakes as well, because they realise the model that they've got there has a certain amount of limitations. It does its job for what they're kind of wanting to do, but actually how do we take it to the next level as well? So I think over time, you know, they can have more and more of these models coming out in New Zealand, which is, I think, what we really need.
Yeah, no, that's great to hear you're looking around the country, which is good. You know, on that, you know, have you looked at the build to rent, or is that something that you'd want someone to actually do that and you'd invest in it?
Like Roy's going to talk about the deals that we're looking at, but yeah, we're doing build to rent, etc. here as well in this fund. So you know, that's almost like a cornerstone foundation of what we're doing. It gives you that capital gain and the return, in terms of, you know, in terms of the long term security of tenure for those people in those properties as well.
Yeah. Awesome, thank you.
Quayside, did we talk to them at all? Does this fit into there, or is they not into, just given the regional council investment?
Yeah, we've had a lot of discussions with Quayside on a lot of different things. Quayside was involved under Scott before Lyndon took over the CEO kind of role there, in terms of having discussions about how the fund could be kind of shaped up. They're going through a big process at the moment, obviously, with the sell down of the Port of Tauranga. So, you know, we'd hope to re-engage with those, you know, in terms of Quayside, once they've got through that kind of full kind of process, once they, you know, understand what their long-term SIPO, SAA allocations are, and we'll be strongly saying, you know, this should actually form a, you know, really important part of your portfolio. So we have engaged significantly on them, but they've probably got a few other bigger things to fry at the moment over the next year or so, until we can really re-engage with them again. Okay, just the next slide, thank you. So, just acknowledging, obviously, that it wasn't the elected councillors that kind of made this decision, but I thought, and this is really from my perspective, And this was based on, like, we had numerous discussions with TCC staff, but also numerous discussions with the commissioners. And then the final decision was made just down the road in a public meeting. So had a lot of discussions at that meeting in terms of with key community advocates, etc., around the benefits of actually why TC was investing $20 million of those elderly proceeds back into this kind of fund. So, I can't speak for the commissioners, but this is my perspective why the business case stacked up. And I think, as we heard earlier on from one of the councillors, there was a public commitment made that if when those elderly housing units were effectively sold to KO or sold to the market, that the proceeds would be put back into kind of housing solutions. And I think, if that commitment wasn't made, there would have been a lot stronger pushback from the community at the time. So this is in one way, helps honour those commitments in terms of actually putting back some of that funding into housing solutions. It worked well because we've got, created a fund structure, and, this is where having 5 other founding shareholders was really important. At one stage, we have 5 sets of lawyers, 5 sets of financial DD looking over all this fund structure. And this was pretty new and innovative. There isn't a structure out there in New Zealand where you can invest into the fund and you can actually look through and see the 20 million TCC's invested or the 5 million Trust Horizon is invested, and that capital gets deployed in your kind of region and recirculated back into the region. But from an investment perspective, so when you talk to TCC's treasury, actually the risk and return of your investment is spread over all those investments in their funds. So rather than TCC, let's say they did one $20 million development themselves in TCC. If that doesn't work, if the developer goes bust, if there's a whole bunch of challenges, all your financial risk and return is concentrated on one investment. The risk and return of TCC's $20 million investment, even though you see it deployed in your region, is spread over the other 20 deals throughout the kind of region. So very much lowers the risk and spreads that diversification so you can get that kind of return as well. So I think that was an important point. There was the ability to leverage this funding. So obviously, this is a separate standalone vehicle. It's not a council-controlled organisation. Council doesn't have control of this. So we can leverage debt into this fund. And again, that just means that TCC can do a bit more through their investment in the fund than potentially putting more debt onto the kind of council's books. One of the big things here was being an experienced, bringing in experienced housing developers and fund managers. If you're looking to really try and get development margin, I know councils, this is not your kind of core business, is doing kind of housing kind of developments, owning and managing, getting the margin, etc. So bringing in, core expertise from Roy and the team to really kind of manage that housing side of things, I think is really important. Having experienced co-investors, as I said, we had 5 sets of DD on this fund. Again, if you're just investing anything by yourself, it's a lot more risky than if you kind of spread it across, a larger number of kind of parties. Has the ability to recycle capital, and as I've mentioned earlier on, the security is over the whole fund. So we can actually do things on multiple owned kind of Māori land, which a lot of actually banks would potentially be reluctant to fund. So kind of actually make sure we've kind of built that in there as well. And then I think the last point for me is that housing doesn't fit that well in terms of 3-year political cycles. It's a 50-year game. We're not going to be a developer that does something, tries to make a margin, just walks away and not cares about it. We're all deeply bedded in our communities. Our founding shareholders are all perpetual trusts that are always going to be here. So having a bit of arm's length, I think, removal from some of that kind of political decision making just sees ourselves through these kind of political cycles, which I think is one of the challenges in the New Zealand market, not necessarily at the local council level, but at the central kind of government level as well. So investing in housing is a long-term game. You want to be able to see through those cycles and make the right long-term decisions. So that's just a little bit from my perspective around why I think the commissioners decided to invest some of the proceeds into this opportunity as well.
And this is actually just going to leverage your answers for a question we're asking ourselves. You've talked about spreading the risk and therefore the fact that deals might go wrong, do go wrong. How do you, as a fund or fund manager, assess risk and the appetite for risk of your fund?
Yeah, I guess if we come back to our core objectives of the fund, which is to deliver new housing that's relatively affordable and targeted at people in need, every aspect of that is risky. So new housing itself is inherently risky, whether we're funding it through development funding, debt funding, or we're deploying equity, either as joint ventures or under our own developments within the fund. making housing affordable makes it more challenging still, and then, of course, more risky in the process. And then to people in need. These are all, I guess, additional layers of complexity and challenge and risk into what we're doing. So the fund itself, it has to be recognised, it is inherently risky. Having said that, we have got a relatively low financial return benchmark that's been set by the founding shareholders of CPI plus 4, so that would be roughly about a third of what you'd normally expect from this type of activity. So that gives us some cushion. And the transactions themselves, it was always recognised through the co-design process that some transactions will be higher return, lower impact, and vice versa. There'll be some that are very high impact and relatively low return. So our challenge as the investment manager of the fund is to, over rolling 10-year periods, deliver that CPI plus 4%, based on a balance across all those different types of transactions that we're undertaking, remembering that we're doing some with equity and we're doing some through debt funding. I'm not sure if that answers your question directly enough.
And so in terms of, do you have a risk matrix that there are certain criteria that you assess to between, if you've got a couple of deals that you're looking at,
absolutely.
Look at, so you have a risk matrix you look at?
Yep, so in addition to the impact approval process that we talked about, once founding shareholders have given their sign-off on the impact of a deal, it then goes to the investment committee. The investment committee puts it through a rigorous vetting and testing process before making a recommendation to the board. And then remembering that the management team, we are already screening out anything that doesn't look like it's going to make the grade right from the very get-go. So it's a pretty comprehensive and robust process that every deal goes through before it reaches board for approval.
And so we have, most investments look at it just in a two-dimensional way. Look, what is the risk and what is the return? Here's the matrix, and where do we fit on that kind of curve? We look at it more like a three-dimensional. What is the risk? What is the return? And what is the impact? And what we have is, work really closely with the board in terms of the guidance, in terms of here's our acceptable risk scoring, here's our acceptable return tolerance, here's our acceptable kind of impact that we're looking for. So we measure it on all those three dimensions, and quite a comprehensive in terms of actually how we identify and confirm and clarify what that financial risk is and what the return is and what the impact is as well.
Thank you. So you talk about the number of people that are looking at this. How many people are involved in the fund?
And how many shareholders in this fund?
No, in terms of how many people are working on the fund and the deal and the risk analysis and talking to shareholders.
So within Newground, there's about 6 people directly involved day to day, and then there's 3 people in the investment committee and 6 in the board, and then all the founding shareholders that we're working with as well.
And the other thing we do utilise here to try and lower that risk is that all our founding shareholders are deeply embedded into the community. So if we're doing a deal in Rotorua Trust and their board and their staff and their team really kind of know who our counterparties actually are. And so they kind of know, actually they have a really good, strong knowledge about some of these developers and the risk and all that kind of side of things. So we leverage that local knowledge a lot to try and de-risk things as much as possible as well.
I think you heard my question earlier in regards to the sort of the history of this, and I guess I'm just wanting to tease out a bit more in terms of the elder housing component. So roughly about a quarter of the pipeline in Tauranga is for elder housing at the moment, so I understand it meets the technical commitment that TCC took to our communities, because that was for elder or social housing, but as you know, from being quite involved, and certainly Christine has a massive background there, that there's a very strong view that this is, putting it simply, this is, an unquenchable thirst that is there. Unless central government steps in with pulls a number of levers, including the ones you've just talked about. So the question is the role of council and whether or not it's a direct investment in elder housing that we used to have, or whether it's through the equity fund. It's still the people's money to invest into social housing in some form. So without any specific criteria in there, how do you approach this issue of elder housing? And in particular, the historical role that councils have had, meaning that it's a low-risk investment, it's catering for a growing need with an ageing population, higher number of elders renting, all those kind of things. If we did it in the past, are we using that equity fund to invest primarily into elder housing in Tauranga in the future? If not, why not? What has changed, and the demand is only growing. So how do you approach that issue as people on that trust?
Yeah, so a couple of components to that. So, myself and Roy were at the meeting just down the road when the decision was actually made, and that was kind of, elderly housing was raised from the public gallery, but we also, it was noted and acknowledged in the meeting, we have some strong voices in terms of the elderly kind of side of things, but actually it is kind of based on need, and there's massive need in terms of essential workers, first home buyers, etc. as well. It's what we do from a fund perspective, and the accounts commissioners were very clear at the time. It was not tagged to be invested into the Bay of Plenty Housing Equity Fund just for solely elderly housing. It was tagged to be invested in terms of housing need in the TCC kind of region, and so that's what's spread across the whole kind of fund, which is it's all based on the need of those kind of regions. So in Tauranga City Council kind of boundaries, there is going to be a significant need, and a lot of our projects will be elderly, but we're not specifically tagged to that. It's just naturally going to come out of that needs and impact kind of analysis, and especially some of the CHIPs that we work with here, so TCHT, their kind of focus is a lot on elderly disabled kind of housing, so a lot of that will get deployed there. But we don't have any specific targets in the fund in terms of what percentage goes into this need group, because it always differs, and it's like that might be a big issue now, but in 5 years' time it might be just the first home workers is a big issue. So we need to be flexible and adaptable in the fund. But Roy, you probably have some more.
I might just add to that the Commission has also required us to commit 70% of TCC's total 20 million commitment to Smiths Farm. So, which you could argue is not particularly well suited to elder housing. So, and that has actually been quite difficult for us to manage because, first of all, Smiths Farm has been uncertain. The timing of delivery of Smiths Farm continues to be uncertain. So we have to make sure that the funds are available to complete our obligations to Smiths Farm in the future at some unknown date, whilst doing what we can with the commitment in the meantime. So we're sort of juggling, I guess. Having said that, we're very pleased to have these two initial elder housing projects underway. And in fact, one of the other projects that's mentioned there but not identified is actually pretty much an elder housing project as well. The RSA, as you may be aware, has sold their club premises in Cameron Road, and we're working with them to develop housing actually for their members. So that is largely elder housing as well. So I think we are very conscious that we do want to make sure we deliver back a significant chunk of elder housing with the capital, and acknowledging also though that we do have this constraint around Smiths Farm, at least in the meantime anyway.
Councillor Schuler.
Thank you, Chair. Just quickly, just hearing that, could you recall the rationale why that high threshold, was it 70% you said? Do you recall why that was decided? Because that's like you say, when you talk about saying on one hand you're saying flexibility, and the next hand you're saying 70% is tied up.
Yeah. So it's 13 million. We had to commit 13 million to the Smiths Farm project out of the 20, and if we didn't, potentially that went away. So we can't speak for the commissioners, obviously. We just sort of
That thing I'd add to that is there was a public commitment at the time, again, from the Smiths Farm development, that it to be retained. I think it was talked about there'd be an element of retained affordability as part of that their process to get the public consultation process. So there was a little bit of a commitment publicly that they, and this was seen by the commissioners at the time as the way to meet that public commitment. So you had public commitment made about the elderly, pensioner proceeds from those, public commitment made to Smiths Farm, and they all put that together and came up with this construct. It's like, as Roy alluded to, it's a bit of a challenge. It does constrain us a little bit. we would have probably preferred to have an unconstrained commitment, but we were willing to work with our founding shareholders to help them achieve their objectives. And at that time, the commissioners said this was their one of their core objectives was this amount of money for Smiths Farm. But that was a TCC decision. It wasn't, we didn't recommend that.
Mayor Drysdale.
Yeah, sorry, just had a couple of questions. Firstly, just to follow up on that. So the $5 million, I thought it was $5 million from council. Is it 13 million from the total fund? I thought it was 5 million committed to Smiths Farm.
So no, it was 20 million was the total council commitment and 13 million for Smiths was the allocation for Smiths Farm.
Sorry, just through you, Mr. Chair, I'm not entirely convinced of that. Fiona, you got information?
Yes, we committed $15 million of investment towards the Housing Equity Fund, and then there was a further $5 million investment that was conditional on the Housing Equity Fund purchasing $13 million or more of housing on Smiths Farm. So 15 million of our 20 million investment was not tied to the Smiths Farm arrangement. It was only 5 million of the 20 million.
Okay, so where's the third? I'm just confused with the 13.
The problem there is that at the point that we committed the 13 million in order to secure the 5 million, we then had 13 million of commitment, which we do now.
Okay, so it's 13 million from a complete fund.
Correct.
Not of Tauranga City Council's.
I guess you could say that, but of course all the investors in the fund have committed to their individual regions. So it becomes a little bit of a circular thing. At the end of the day, we've got a pool of 24 million for Tauranga, and 13 million of that has been committed to Smiths Farm.
All right. And secondly, just I'm interested in the mechanics of the fund manager, how they paid, what are they paid, etc.
Yeah, so the fund manager, it's based on a percentage of invested assets, effectively, so 0.8% of invested assets. No one's really getting rich on this fund at the moment. Newground Capital is definitely wearing a kind of bit of cost associated with it. So it's not based on committed capital, it's actually based on investments in the ground. 0.8%, there's a minimum fee of, was it 250,000
Okay,
to kind of cover that.
Yeah, no, that's great, thank you. In line with market, which is good.
Shall we keep on moving on? So the next slide was the structure of the fund. I know we've talked about this at the meeting previously. Happy to answer any kind of questions if anyone's got any kind of more questions on the structure of the fund. Okay, well, we'll just keep on going then. If we click through another couple of slides, I'm going to hand over to Roy, who's going to talk about more exciting stuff like actually where we're investing and what it looks like.
Yeah, so this is just a snapshot of where we're at today, really. Of course, this is moving around day by day as new deals are added and one or two fall off for various reasons. But, I guess the things that we would point to out of this slide in particular are, the number of homes being delivered. So 278 homes in this pipeline for the BOP funding itself of 62 million. And then also probably worth mentioning, the 676 additional homes. Now, this is not to suggest in any way that none of those 676 homes would happen without the fund's involvement. That's not the case, but the fund is certainly helping to catalyse those housing or those homes in some way. You can see Smith Farm in there, obviously, for 324 homes, and we've just talked about that as a case in point. The other one there that's interesting is the one in Rotorua, Kawaha Point Road. So the 128 homes mentioned there. So that's coming from the redevelopment of the Waikiki Sports Club, which has been an idea that's been circulating around in Rotorua for quite some time. But there's been some transport challenges there. So what we're doing, we're basically we've worked with council there to essentially help them to build core infrastructure without them needing to borrow more within their debt caps, because we're pre-funding the purchase of land from them, on which we're going to build 44 homes, and in the process also we're solving this long-standing problem of the lack of this road that's in itself going to open up the other 128 homes to be developed within Waikiki Sports Club. So that's probably one of the really interesting examples, I guess, of where we're getting, a lot of bang for a relatively small amount of capital commitment from the fund.
So just again, we've got Smith's Farm at 6.5 million, so I'm really confused. We've got 13 million, we've got 5 million, we've got 6.5 million. So
yes,
how much of Bay of Plenty HEF funding is going to Smith's Farm?
Yeah, so Alistair mentioned before that we're going to be taking some debt into the fund. So we've got at the moment 60 million of equity commitments from our 6 founder shareholders, but we're also working with one of the banks to bring in another 40 million on top. So the 6.5 that you see here, this is kind of our internal working spreadsheet. So the 6.5 is the actual equity that we think that we will end up committing from the fund to this project by the time we also bring in some debt funding, if that makes sense. Because we'll have a total of 100 million to deploy by the time we bring in the debt funding, rather than the 60.
So the difference between that 100 million and the 169 million there, that's what, private capital or other
Correct.
Funding sources?
Yes. So the 169, that's exactly the project size. The difference between the 62 and the 169 is private capital, but then we will also bring in this extra 40 or 38 million of debt.
Yeah. So it's unclear as to, because really the BOP HEF should be, maybe you can separate it out as equity and total investment, because I think that's, yeah.
We have played around with this slide quite a lot, and I do accept that it's a bit confusing. Of course, at the moment, we don't have this 40 million of debt funding confirmed.
Yeah.
That's an ongoing process. So,
but like if we've got a commitment to Smith's Farm of 13 million,
yes,
like you can't differentiate there. Have we, Otamoto, are we committing to 35 or are we committed to 9? That's my,
yes, yeah.
That's my.
Yeah.
I have no idea looking at that slide.
Yeah, I understand that. It's quite confusing.
And so just a question, Western Bay of Plenty, so whose fund was ring-fenced to allow developments in Western Bay? Like, that's obviously Tauranga investment is in Tauranga.
Yeah,
where did the fund come from if they're not?
TECT and Bay Trust.
Okay. And is some of that also going into Tauranga?
Yeah. Yeah.
Yep.
An equivalent amount based on population?
Yep.
Yeah, roughly. That's how we allocated it.
So probably the other thing I'd like to talk to on this slide quickly is probably our involvement in Papakainga developments. As you most likely know, the banks are often reticent to provide development funding for Papakainga because the nature of the land being collectively owned makes it difficult to foreclose on if there's any issues. We don't have the same constraints that banks have, so we are taking the opportunity to, look at Papakainga developments on their merits and support them where we can. What we're very focused on there, though, is making sure we're taking a partnership approach with banks, because really we're looking to rinse and repeat as much as we can in this space. So the ones that we're committed to at the moment, we've got the one in Coastlands. So the first 16 homes in a Papakainga development in Coastlands. We've got Kiwibank standing by, ready to refinance us out once those homes are completed and occupied, and then we can move on and do other Papakainga developments within the Whakatane area. Similarly, we've got a project in Rotorua or Tauranga. Very similar, and exploring one or two here within Tauranga as well. And that's a much needed innovation, I think, in the Bay of Plenty area. A lot of Māori-owned land that's underutilised, and we can really make a pretty significant difference there. I'm heading over to Kaha tonight to look at some sites over there as an example. Where there's just this huge need, really.
And we're seeing that quite a lot, which is, the big banks are not willing to kind of lend up front. They have their 10 kind of step guideline kind of process set by Australia, and if you don't tick any of those, which includes security over kind of land, they're quite reluctant to lend that development finance. But we know these kind of groups, we know kind of these iwi partners really well. We know their balance sheets, we know how long they've been in the community, we know that they're really good payers. If we can actually help them with that development finance at the start, get that development done, get their people in those kind of rentals, get them paying rent. Once the banks actually see that, then they're a lot more open and willing to come in and actually provide that finance. So it means that we can kind of catalyse that development, do the development finance for a couple of years, they get it set up and running, the cash flow kind of coming in, and then the big bank can kind of step in and take our finance off our hands, and we can move on and do that again likewise. So I think that's a really important thing that we're going to do in the fund, and we just see that across the board around the whole region in terms of the need for this type of funding.
Councillor Alderson.
Yeah, just some comments, and it probably comes back to what I discussed earlier. It's good to see these papakainga, although I'm drawn to this tarawera of 7.5 million for 10 houses, so I'm thinking my whānau over that way are doing pretty well if that's the case, and tarawera's a bit of a hot potato. Waikite Rugby Club, Kawaha Point, it isn't papakainga, but that rugby club used to be Māori land. I'm assuming it's been taken out of Māori title and now general title. And so I guess my sort of point is Tauranga Moana. There's some similarities here, and then you've talked around down Te Kaha. I just think there's a huge untapped potential here in Tauranga. We talked a little bit about Ngāti Hangaro, and they're trying to find some of these solutions that really open up this opportunity. So I just probably want to reinforce their point that I think there's some Tauranga's really unique in terms of its Māori land pretty much being residential. Obviously, council has a role in it, but yeah, I guess I just want to re-emphasise their point that, and given Tauranga's large share through both council, through TEC, through Bay Trust, some really local solutions.
No, it's a point well taken, and I think Te Araro Tangata is definitely going to be key to us in making sure that we build those networks and connections and can find the right transactions to support. If there's no further questions on this slide, we might just move on quickly. We talked obviously a lot around Smith's Farm, which is the other individual transaction that's detailed here. But just to talk quickly through Devonport Road. So this is clearly an elder housing project that we're undertaking as a joint venture with Tauranga Community Housing Trust. So quick background here, probably interesting. TCHT had purchased some time ago, quite some years ago, 2 sections in Devonport Road, but then found that they didn't have the headroom to develop them. And so when we realised this, we suggested to them there was an opportunity to work together and basically build out the housing that they had planned there. So that is what's transpired. We've formed this joint venture. So they put in the land, they put in a little bit of cash, we put in capital to match, and that project is moving along quite quickly. We've got resource consent, we're in for building consent. We've appointed the builder and hoping to get going with civil work shortly. That's 20 elder homes, 10 of which are accessible. A nice, neat little model with a very trusted local partner. Might skip forward again, please. Smith's Farm, unless there's any specific questions that we haven't already covered, can probably move forward on that one. So these graphs are just sort of highlighting, I guess, how we're travelling, and just, we're only a year underway. I think we formed the fund legally in March last year. So, we're still very much early days for the fund itself, but I guess we're pretty pleased with the progress that we're making in terms of building our pipeline right across the various sub-regions. and across the different types of typologies and cohorts that we're here to serve, really. And, for all the right reasons, I guess. I mean, we do want diversification, clearly, both geographic diversification, typology diversification, and across the different cohorts out there in the market. Are there any questions on those slides specifically? Nope. Then we can move forward again, please. So just a couple of points here on our sort of future growth plans. Recycling capital is clearly very important to us. We are happy to stay in high impact projects for whatever it takes for the medium term. But to the extent that we can recycle capital more frequently, that is a desirable thing. We can help more people. So that is something that's high on our priority list. We've talked about this debt funding. This is pretty innovative, really. We ran an RFP process late last year across all the banks, saying, look, essentially, we can go two ways. We can go the conventional way, which is bring bank debt funding in project by project. That's the way it's normally done. But what that wouldn't help us with is, particularly with Papakainga developments, at all. So what we did is we went out to the market and said we would like a debt funding facility at the fund level, which is basically like a slush fund. What we do with it is our business. You, the bank, won't have any say over whether we can go ahead with a project or not. And so that sort of took a leap of faith. We weren't by the banks. We weren't sure whether anyone was going to come on board, but in the end, both ASB and Kiwibank came on board and put proposals together that met our criteria, and we are proceeding with Kiwibank at this stage. So pretty happy with that. And then Alistair mentioned before about the raising new equity capital from institutional investors. This remains a goal. At the moment, we're primarily focused on making sure we do a good job of deploying the initial capital. But we are getting ready to start working on an investment memorandum to raise capital from the wider market in time, as well as exploring these other opportunities that are kind of around. It's great to see that other regions around New Zealand, both councils, community trusts, etc., are looking at the model. Toi Foundation, New Plymouth District Council, we've mentioned, Whanganui District Council, Central Lakes Trust, Otago Community Trust, and Community Trust South in particular, Eastern and Central Community Trust, and Hastings also looking at it. So we're sharing the information around the fund to help people sort of work out what's right for them. We're, I think, open to sort of partnerships and things, but that's all further into the future.
And just to add to that, the fund's getting increased recognition. So at the Mindful Money Awards a couple of weeks ago, we got highly commended in terms of the best new fund kind of category, which is great to see. But we've also just secured a significant amount of pro bono funding to look at our legal structure of the fund to see actually how we can take it to more of a national kind of level. So part of the Centre for Sustainable Finance, their partners need to provide some support, and so we've just secured some support about that as well. And I think, we've had a discussion with the founding shareholders about 3 or 4 months ago, just going, look, one of the constraints to this fund, if we're going to get institutional investment, is the liquidity and the size. And one of the constraints associated with that is the mechanism that we've created to make sure your capital is deployed in your region. It gets quite complicated long term if you think 20 years down the track. Once it gets recycled, what does that kind of look like? So what is the solution to look like that says actually we still want to make sure those founding shareholders' capital is in the region, but then if we were going to take it to more of a national stage, what does that look like? And that does actually have really benefits for all the founding shareholders because it creates more liquidity, more size in the fund. So if the council decided in 10 years' time or something like that, actually this isn't for them, it creates the ability to kind of exit, etc. at the same time, a lot easier than it does today. So we're just kind of working through that, and as I said, we've just secured some pro bono kind of funding, significant amount from a well-respected firm in New Zealand to actually do that piece of work, and probably have some discussions in maybe 6 months' time around where that's heading kind of long term as well.
I'm going to ask a question actually because I haven't had one yet. So you're talking about your debt funding there up to 40 million. In the long term, is that going to be a percentage of the asset, or?
We expect it'll be roughly around that 40%. Yeah.
As an
Long term.
ongoing, yeah. And then, obviously, when we go to the bank and ask for a mortgage or whatever, we guarantee it. Is council likely to be a guarantor for?
No, and in fact, it's specifically ruled out in the founding documents. Yeah.
Thank you. That's good. Amy?
Thank you, Chair. You talked, I think you're sort of alluding to that this is the first mover, Tauranga, and everyone else is watching it. What have you seen around the world and globally? Is there anything that looks at this? I know there's countries like Canada and others that have definitely done it in the Indigenous space. So is there anything we've looked at and can learn from?
Yeah. So we definitely looked before we created this fund. We said, like, what's actually happening overseas in US, Canada, the UK, Australia. They're actually, all of them are a lot more advanced than we are in this terms of the space. All of them have institutional funds set up and structured to invest in kind of residential property. What we had in New Zealand, which is something unique, we have these big funders that are like got a region around them, so they're not like a Tyndall Foundation where they can invest anywhere in New Zealand. And so what we had to develop and design a structure that could see that capital getting deployed in those sub-regions, which is, we didn't really see that offshore. And that's why we had to create this fund structure. But we definitely looked to see what other funds, what they were doing offshore. And nothing we're doing here, apart from that regional, how the capital gets deployed, is unique. You know, this is pretty standard in terms of actually investing into housing solutions, creating a fund that other people can invest into. You know, we're seeing it happening and starting to happen in New Zealand, but very much at a commercial kind of basis, just solely focus on risk and return, not around what community impact as well. So yeah, we looked at best practice overseas, especially in those other regions that I'm going to mention, to see if there's anything we could kind of take, and took some of those learnings in terms of what we're doing here as well. Look, I think that was pretty much our presentation, but we had a few question prompts at the end, but it's really open floor, Chair, in terms of any questions or discussions that we want to have.
Another question, if that's right. Probably just the same. You know, I've sort of thrown out a few others. So you're aware of Hapai and what they're doing, and so they're a collective of iwi around the country that are investing in a number of things, commercial, but a lot of housing developments as well. So.
No, my apologies. I realise I didn't really introduce Newground Capital, which I should have at the start, because you may be not aware of Newground. So my firm founded it in 2014, specifically as an impact investment firm. We are the pioneer in New Zealand in terms of build-to-rent housing. So we formed our first build-to-rent project in 2015 in partnership with New Zealand Super Fund and Ngāi Tahu. Since then, most of our build-to-rent housing has actually been done with Hapai housing. So in the early days, we would bring projects to them that they would get involved with from a financial perspective. These days, it's more them bringing land to us, and then we develop it as rental housing. So yeah, we do most of their build-to-rent housing all around New Zealand, and I guess probably 80% of our housing is done with iwi and Māori housing organisations. So we've been a pioneer, or the pioneer actually, of build-to-rent housing in New Zealand, and also for impact investment funds. So we formed the country's first committed impact investment fund in 2017 in partnership with Akina Foundation. So we've been sort of operating on these two bases, you know, affordable housing and build-to-rent housing on one hand, and impact investment funds on the other hand. So very aware of Hapai, and a very special client.
So do you see any synergy there?
Yes, there is certainly synergy there. So we have talked to, for instance, Te Arawa Group Holdings is a good example. They've got some land that they're interested in developing for housing, but they come from a very commercial lens, obviously, being the Group Holdings part. So in that situation there, we've brought in Hapai housing, and so there's a three-way conversation going on there.
Any further questions, or would someone like to ask some of the pre-prepared questions we had on page 2?
They were just in case, which I didn't think was ever going to happen. There was no question from the councillors, but I was pretty much assured Roy will get numerous questions. We probably won't even have time to get to those.
There's some quite good ones in there. I'd like to ask the third to the bottom one. What are the challenges in the TCC boundaries you're finding?
Yeah, that's a good question. I mean, I think one of them has certainly been navigating and identifying all of the parties that we should be connected with in the iwi and Māori space. That has certainly been a bit of a challenge here, as mentioned before. Land values here, very expensive, difficult to make projects work clearly. But a lot of those other challenges, we experience everywhere. So I think, we're pretty pleased, I guess, with the projects that we've already got in the pipeline within the TCC boundaries. It's a good spread, both around the city boundaries, but also facing into different cohorts and different styles of housing itself as well.
There's significant kāinga ora land that's potentially going to be put on the block.
Yes.
Is that an opportunity? Is there sort of projects that you could think would potentially suit some of those lands?
Yes. So two of the projects on that the pipeline earlier that you saw are land that we're looking to acquire off kāinga ora. There's a lot more that could be done. For the time being, I would say kāinga ora are probably still playing their cards fairly close to their chest and not the easiest to deal with. But that'll probably get easier as time goes by, I guess. The other aspect there is that we, when we're looking at transactions, the ideal scenario is that we've got an operating partner identified from the start. So if a community housing provider approaches us with a particular transaction, or an Ahu Whenua Trust, if they're already coming with land and they know what they want to do and they know who it's targeted at, that's a lot easier for us than just sort of finding a sort of a random piece of land and then working out what to do with it afterwards. So in terms of our priorities, we're looking for transactions that come with operators who already have a plan and know who they're trying to serve first.
And the other thing I'd just add to that is I think the timing of this fund has been very fortunate to us as well. If we'd launched 4 to 5 years ago when the market was really frothy, the developers had a lot of money, you'd have to kind of move really fast and you'd be paying over the odds for this land, but it's complete opposite situation at the moment. We're getting a lot of the developers, a lot of the group builders coming and talking to us. There's no rush for us to construct deals on the land. We can kind of actually take our time because there's not many other people actually out there with significant capital to deploy in the space. And actually, we're seeing developments that actually a lot of the builders, the group builders are struggling to actually, keep their staff, that we can actually help support that in terms of this downturn as well. So the timing for this fund to be launched is really well. And as you saw that pipeline, really good pipeline of deals across the region, the typologies and everything we wanted. If we'd launched this 4 years ago, I think it would have been a lot more of a struggle to get that pipeline of deal flow just because the market was so much more frothy than it is today.
Thank you, Chair. So, yes, you talked about a new fund, but we're even newer. So there's a bit of an expectation from us in terms of what we're seeing. So I guess a couple of just the next steps. It'd be good to know what sort of frequency, I'm not suggesting we have a say in what happens, but are we sort of talking about a 6-monthly update on where we're at? And on that, I'd definitely like to know what our baseline was that we're measuring success against, and even if it's a little bit qualitative, quantitative, that's sort of okay. And the other thing, I just do want to get a bit more clarity around that governance structure, because I'm a little bit concerned that a board is appointing its own board on quite a big fund, and I think this has got such a wonderful potential to solve a challenge we've got. So that's just something, and you said you're talking about what the terms and things, so you'll probably have a board charter or something or other. That it would just be good to get some clarity, please. And from our CEO, I'm just going to get a bit more clarity on what the delegations are and who we're going through and what the delegations are to acknowledge that decisions are within what we're expecting.
Thank you, Deputy Mayor. Some good questions there. Hemi, you want to... Jen, can you turn off your mic? Done.
Thank you. As you can probably see, my pet topic is papakainga. So there's been some announcements around national standards around papakainga. I think 10 without resource consent, and then up to 30 discretionary. Are you guys over? One, my question: are we over that? And two, we can submitting on it, because I would have thought that would provide a great opportunity to move some of these projects in that space.
Yes, so are we submitting? We haven't planned to submit. I guess, we're there to support organisations with their papakainga plans. There's a couple of things that we are advocating for, I guess. One being sustainability standards around papakainga. So we had an interesting experience recently where we've got NZ Green Investment Finance, as you're aware, as one of our founder investors. The threshold that they set for us to draw down their capital is Homestar 7. So in line with that, we built into the heads of agreement with one of the Whenua trusts that we're doing the papakainga with, that we wanted the papakainga to be Homestar 7 for all the right reasons: cheaper houses to live in with lower energy bills. When that trust went to MHUD for funding, MHUD said, no, if you're going to do Homestar 7, we won't fund it. So that's the kind of a situation where we definitely do pile right in there. We're working with Green Building Council to advocate to MHUD the fact that that's kind of ridiculous, and to make sure that some of those things where we can influence things positively, get resolved. But I have to say, we're a very small team running on a fairly thin margin in this, and we're running very hard to get this capital deployed and deployed very safely. So our capacity for some of these extra things is a little bit limited.
Have you got clear on why MHUD did that? Is that a new government directive or something?
Pretty much, it's about actually the lowest cost that they can actually deliver the housing units they want to deliver. So yeah, it's definitely under the new coalition kind of government. It's all about actually cost per kind of square metre. It's not necessarily, they don't have that, which is where you've got a little bit of a challenge, where you've got one arm of the government, to some extent NZ GIF, sort of saying, yep, Homestar 7, and the other arm going, no, we're never going to fund those ones because you're actually putting too much cost into the building project, and we just want to deliver it at the lowest possible kind of cost. So it's always a bit of a challenge, and ultimately the way these things kind of work is over time there'll hopefully be a bit of balance in terms of actually one comes up a little bit and another one comes down a bit, and we can meet in the middle.
I think in that particular case, what we might have found out just on Friday actually was that maybe what the executive team within MHUD think is happening and what the people on the ground are actually doing might be different. So we might get some positive change out of this one.
I think it'd be great if our council can also advocate for, it's not saying what is the right thing to invest for a project, but it's saying you shouldn't have the government holding back a private investment fund from putting in something which will lead to better outcomes. To me, that just goes against the market philosophy of the government.
And I think that there needs to be some flexibility about the Homestar 7 as well. The new Homestar 7 is equivalent almost to the previous version Homestar 10. So it's probably, we think the standards are actually set a little bit too high, and actually they probably need to pull back from that a bit, because Homestar 10 is the old Homestar 10 is pretty much, unless you're wealthy, very hard to deliver that at cost and make its financial business case to stack up. So I think both elements need to come back a bit.
Yeah, in that case also they're kind of missing the point. What they should be focused on is funding up to a certain cost per square metre. And then it's up to us to make it work within that. They shouldn't care, should they?
Sorry, you planted this question in your list, so I'm going to ask this one as well. Are there aspects of the way the fund is operating that you would change?
Kind of alluded to that in terms of in the future, when we're looking to seek institutional kind of capital, I think we need to actually have a look at some of those constraints around, what actually happens institutional capital if they want to invest in a fund like this. They want to see it as similar to other institutional funds as possible. So that might mean a bit of a step back from some of the founder shareholder rights that we've got at the moment, a bit of a step back in terms of making sure that all the board appointments are very, very much independent, a bit of something around actually maybe the fund invests this percentage in this region rather than specifically dollar-wise. So we just need to kind of work through some of those. But that's not impacting on what we're doing at the moment. That's more like thinking in the next 2 or 3 years that we will work through with all the founding kind of shareholders to create a bit more flexibility in terms of the fund as well. I think the Smiths Farm, as we also mentioned, does create a bit of complexity in the Tauranga region in terms of the unknowns, when that capital is going to get drawn down, which means that we're trying to find deals that we can kind of recycle the capital pretty quickly in the TCC kind of boundaries to make sure we've got sufficient kind of capital for that as well. So those are the ones, they're not keeping us up at night, but they're things that we need to kind of start thinking about over the next year or so.
All right, are we done? We are done. Well, thank you, gentlemen. It's been a really good education for us, I think, and it's great to see something like this coming to the Futures Committee. It's the future of housing in the city and the wider region. So congratulations on where you're at the moment, and thank you very much for your time. Appreciate it.
Appreciate it. Thank you.
I really appreciate it. And any more questions that you have, just send them through the TCC team, and we can answer those as well.
Thank you. Kia ora.